everyone's talking about the revaluation of gold. But David Morgan says gold doesn't need to be revalued. It's the constant. We're going to find out more from him right now of what he means by that. David, welcome back to the show. Always good to see you.
Well, Daniela, thanks for having me back. Appreciate it.
Look, I don't think I remember the last time gold's been so much in the news, David. And it's not just the price action that we're seeing. Obviously, talk of auditing Fort Knox, revaluing gold. So I want to try and cover all this with you today. Let's start with this talk of revaluing the yellow metal. For folks new to this concept, what does that entail? What does it really mean when we talk about the revaluation of gold?
It's pretty simple. There's an official price of gold that the Treasury uses, which is $42.22 per ounce. And then there is the market price of gold, which, Kitco and ITM trading and, all kinds of places, the COMEX publishes what the daily fluctuations in the gold price is. And right now it's roughly 2,950 US dollars per troy ounce of gold. So there's the market price and there's the official price. So the revaluation, gold's a constant. An ounce of gold's an ounce of gold anywhere in the universe. So what changes? It's the paper that changes. How much paper's been printed during, a given time frame. In other words, when gold was at $35 the ounce before it was revalued to $42.22, how much gold was there versus how much paper was backing it, or how much gold was backing the paper. So right now we've been off the gold standard or dollar standard tied to gold from August 15, 71. And in that time, there's been massive amounts of increase in the currency supply. And so now the market says it's $2,950 US, 4,000 Canadian, whatever it is in other currencies. So obviously the market's telling us there's been a massive amount of currency produced in those 50 plus years. Now what's happening is the United States at the financial level, Treasury, Fed, whatever, is talking about revaluing the currency to match the market price of gold. And if that were to occur, it would be a massive increase. You take 42 and divide it into 2,900. That's a pretty big multiple, and so that would bring the gold balance in today's terms in fiat to about rounding up about $800 billion. So $800 billion is certainly enough for me to get by for a few years. But in terms of how much debt we have, which current account deficit's 36 trillion, if you round up the 800 billion to 1 trillion, you round it up even further, that's only 1/36 of the debt. So it really doesn't do a lot to help the balance of or our debt situation. Now it could help, readjust people's thinking, bringing gold into the monetary sphere, bringing some stability. And I interviewed Dr. Judy Sheldon some time ago, As Good as Gold, her book about how to put gold back in the monetary system. And that's basically using it as a tie to issuing United States treasuries, especially the long bond, or we might even go 50, maybe 100 years. My words, not hers exactly, but the concept, which I think is a pretty sound concept, to try to put some stability back into the monetary system. So hopefully you didn't over answer the question, but it's to bring the balance sheet of the United States into a better position, which it would. But when you measure it against the amount of debt outstanding, it's really not that significant.
So let me ask you, in your opinion, what is the likelihood this is going to happen?
I think it's unlikely. I think we're going to do some audits, and we can talk about that in a moment. But Secretary of the Treasury basically said that it was misunderstood and that he's looking at gold more as a sovereign wealth fund type of situation rather than a revaluation to the balance sheet of the United States. So I think that's a much more likely situation than what some people have already talked about.
Because that would mean, just break it down for us gold holders, all of a sudden our wealth would be how much bigger?
It wouldn't be. If we mark to market, our wealth would be at the spot price of gold, $29.50 today. And so it would just change the balance sheet. It changed it a date of
Okay.
entry in the books of the United States is what it would do. Now, if the United States decided that they were not going to mark to market and they decided that gold should be pegged at $5,000 the ounce, and at that place we're going to issue bonds and we're going to do some monetary manipulations, then obviously gold holders like you and I and many of people that follow what we do, that would be, that would be significant to them percentage wise. But that's not what they're talking about. I mean, maybe in the back room behind closed doors, I don't know. But as far as what they've put out publicly, it's just a mark to market, which doesn't change anything for us because any day we decide to buy and sell gold, it's basis whatever that daily's price is, and we get a bid and ask, and we make a determination that we're going to buy or we're going to sell.
Thank you for answering that, because I think that's what was, the main question that, gold holders had. You mentioned the audit. It's everywhere in the news, we get it, but is the bigger question not whether it's there or not, it's how many hundreds of times it's been sold without having fear to deliver?
Absolutely. Let me just give a little background and we'll get specifically to your question, but I think there's a bit of information that's not 100% correct. I mean, some people I really respect, but they're not, it's not their specialty. Talk about, well, all the gold's in Fort Knox. That's not true. So let's look at where the gold purportedly is right now, and then we'll talk about what you just asked me. So right now, the U.S. gold reserve locations primarily are Fort Knox, Kentucky, and that has 147 million ounces purportedly of gold. Well, we have 261 million ounces of gold. So where's the rest? West Point Bullion Depository in New York holds about 61 million troy ounces, and the Federal Reserve Bank in New York owns about 51 million ounces. So if we're going to audit the gold, we should really audit Fort Knox, West Point, and the Federal Reserve New York simultaneously. And the reason I say simultaneously is because I'm not saying the U.S. government would ever do this, but there have been, and I've documented this with John Adams in Australia, where gold has been moved from one facility to another to make the books balance, and then the gold is put back in the original location. So now your question, does location prove ownership? No, it doesn't. So we could come in and see 147.3 million troy ounces of gold in Fort Knox and the other two I mentioned, West Point and the Federal Reserve Bank of New York. It all adds up. Every ounce is there. So what? Unless we know who the owner is, or multiple owners, or if it's been swapped, or if it's been hypothecated for a loan, or if it's promised to someone somewhere as collateral, unless we know that, all we know is its location. We do not know its ownership. So this is a very important
That is such a good point. That is such a good point. Please continue.
Well, I just am complimenting you for bringing this up because this happens often. I mean, there's been scams run of where, hey, here's the gold, I own it. No, you don't. You've located it. But you got to be careful because a lot goes on in the financial world, as we all know, and the derivatives markets run the whole system now, along with the bots, the algorithms, the computers. So you got to be very, very careful. And, most people are somewhat naive. I mean, well, if it's sitting at that location, obviously that's the owner, and it's not necessarily true.
Well,